Tesla stock is ripping today because of this one reason. Now, there has been plenty of bullish catalyst over the past couple of weeks, but mainly this 3% plus rally you're getting today comes down to this: rate cuts. But specifically, why we are getting rate cuts. For context here, let me break this down a little bit. So markets just a couple of months ago were expecting 3, possibly 4 rate cuts in 2023. At the same time, inflation was over 5%. This meant that due to the banking crisis or for something unseen, markets were expecting the economy to tank, and for that to be the reason why the Fed would aggressively cut rates. But what you're actually getting today after the CPI report is a rate cut no longer being priced in for November, but now being priced in for December, but yet your rate sensitive companies are going higher. Well, this is happening because you're now expecting rate cuts based off of 40-year high inflation falling and the economy not tanking. So there's a big difference between the Fed aggressively cutting rates because the economy is going down the toilets quickly, or the Fed cutting rates because inflation hit 9% and is coming back down and is on a path to 2%, and that being the reason why the Fed's cutting rates. There's a huge difference there. And Tesla's business, sure, it benefits from cheaper interest rates, from being able to get more people into Teslas with a lower monthly payment based off of that. But at the same time, if the economy goes down the toilets, it's not going to matter if interest rates are cheaper. If people are losing their jobs, there's going to be less people that are able to buy themselves a Tesla. I would much rather take higher interest rates and a healthy economy for Tesla's business model, for their fundamental business of selling cars, rather than a terrible economy and lower interest rates. You're just going to sell more vehicles if people have jobs. That's the bottom line. And what you're seeing today is the first step, the true step towards a soft landing and getting rate cuts that are not expecting the economy to go down the toilets. Now, this pricing in of a soft landing is happening today because the CPI report came in much better than expectations on the headline numbers, especially the headline month over month came in at 0.1%. You were expecting 0.2%, and last month's reading was 0.4%. So from last month to this month, inflation was 0.4%. and it came in at 0.1%. If you annualize that and times that by 12, you are at 1.2% inflation. That is what the Fed wants to see. That is a soft landing because the economy is not tanking. It's very resilient right now. For one reason or another, it's doing well. Now, we'll see what happens with student loan repayments that start at the end of July and August, how that eats into some discretionary income, and maybe that's a topic for another video. There are risks that are still out there, but right now, you're pricing in that soft landing, and you're pricing in bullish rate cuts, not bearish rate cuts. People make the argument that typically the markets fall when the Fed cuts rates. And that is true because usually when the Fed cuts rates, it's because something very negative is happening in the economy. It's not too often, like ever, you get the Fed cutting rates because simply inflation's coming down. That typically does not happen. You usually don't get a soft landing or no recession during a tightening cycle. That just typically doesn't happen. It might happen in the future. As of right now, it doesn't look likely. That gives Tesla stock room to run. Now, I will tell you in a quick disclaimer, and I will give you a warning. Tomorrow, you are going to get the Fed meeting, but specifically the dot plot. And this is going to lay out when the Fed is expecting to essentially cut rates. I think it's pretty clear. We're at that terminal rate. You're probably not going to get another rate hike. If you do, there's a chance it's priced in for July for that next meeting. It's a possibility. But I think the biggest problem or concern you might have is if the Fed members expect rate cuts deep into 2024, if we don't get that December rate cut or maybe in the first 3 months of 2024, then you might have a little bit more downside left to get priced into this market, because that's a decent amount of time to have rates higher, and people might start to say, hey, maybe that will lead to a recession. I can't forecast what the dot plot is going to be tomorrow, so you got to keep this in mind throughout your trading tomorrow. The Fed meeting starts at 2 p.m. The conference is at 2:30. You'll get the dot plot when that statement comes out from the Fed at 2 p.m. tomorrow. So that's going to be the biggest catalyst tomorrow. You're also going to get PPI month over month, and believe it or not, PPI is a little bit more important than CPI for the Fed, because PPI tends to be a bigger kind of indicator for PCE, in which the Fed really likes to look at PCE. Now, PPI month over month, good thing is it's expected to be in deflationary territory. Month over month readings are expected to be negative 0.1%. So we probably don't have too much to worry about there. Although markets are selling off a little bit, kind of in fear, maybe a little bit of preparation for tomorrow's Fed meeting. Still, markets in the green quite substantially. Tesla stock up 2.5%. Now, let's go ahead and talk about Tesla. Now, Tesla has been rallying, and a lot of people are calling for a move over $300 per share. My personal opinion as well. But Tesla stock could soon join the $1 trillion club again, and according to the Motley Fool, this is all but a foregone conclusion, as they say here in the last line of this paragraph. Now, why they think this is going to happen is some of the reasons that I just mentioned, right? Rate cuts starting to be priced into the markets. At the same time, a soft landing looks more obvious now than ever. But they go on to point out that the 1 trillion club, you only need a 28% rise from here. A 28% rise for Tesla stock from here is going to put the stock roughly at about $330 per share. That's kind of what we expect off of this latest rally. I think you'll find resistance at $300 per share on a psychological basis. And then I think you find some resistance at $315, this prior level of resistance that you've seen in August and September of 2022. But according to another note put out from Cathie Woods again today, she really is hammering down on this narrative of the robotaxi is going to lead Tesla's revenue towards $4 trillion. And this article came out earlier in the day today at about 8 o'clock in the morning today. And as I was reading this article, I really thought that I want to highlight this for you. That robotaxi, sure, fine and dandy, it's great. But you know what's better? Full self-driving. Elon said full self-driving software can be sold at a 100% gross profit, and that it will power the robotaxis Tesla plans to mass produce in 2024. So FSD is the gold here. That is really what you want to sell. That's where Tesla's profits are going to absolutely soar. Now, I said this in one of the last videos that I put out, maybe 2 videos ago. My mom, she hates driving, right? She would love to just sit back and not have to drive and do whatever else. But she doesn't trust a car to drive for itself. And I think that is a reason why a lot of people are not going to go out and buy a Tesla and buy full self-driving, even if they could afford it, is because they're not exposed to it. They don't see Teslas driving themselves all over the place or driving other people all over the place. So I think once self-driving taxis and cars are actually like hitting the news, like these cars are driving themselves and people actually start to talk about this and see them happening, I think that's when you get the real influx of buyers to full self-driving. And I think that does happen at some point in 2024 or 2025. And that's where you really want to be positioned for Tesla to become the most valuable company in the world at that time. Once you are getting those kind of net profits, millions of people buying full self-driving, That's where things are going to get real juicy for Tesla. Forget what you're seeing now. Sure, partnering with GM and Ford are great in for momentum, and it's going to be a bigger source of revenue down the line. But this is the reason why you are truly invested in Tesla today. Now, as Elon as well says, they plan to produce 20 million vehicles a year and to have up to 12 gigafactories that produce those vehicles. Now, this is only the auto industry of Tesla. We know there's solar, we know there's other segments to the business as well that are also going to grow exponentially over time, and this is Tesla's plan by 2030, but it's really full self-driving that is the profit machine that is going to fuel Tesla's stock to be the most valuable company in the world. Now, in the short term, Tesla's stock is still down quite a bit from that all-time high. Current market cap of $792 billion. Whereas I could easily make an argument that if you look at NVIDIA, that made $7 billion of revenue for April of 2022, I could very easily look at Tesla and see that they made $23.33 billion in revenue for March of 2023. Sure, their profits were down a little bit because, hey, they were cutting prices, right? So they didn't make as much total profits. But their revenue numbers are much higher than something like a NVIDIA. Now, why is NVIDIA over $1 trillion market cap and Tesla is not? Well, investors have this false narrative that NVIDIA's market cap is going to be larger than Tesla's, when in all reality, I think that is not true. Now, they're both going to have huge markets. They're both going to have huge total addressable markets. But I think Tesla's going to take the cake over NVIDIA, and that might be a hot take. But if you really factor in all of these different things, it's pretty clear that Tesla is solidifying itself as a service business, as a solar business, as a renewable energy business in general. That's where you want to be over the next 50 years. Sure, data centers and companies, sure, they're going to need NVIDIA chips, but AI is much more uncertain than electric vehicles. And that's another argument that I would throw in here, that Tesla is well deserving of $1 trillion market cap. And this leads me to what has really been happening as of recently. As of recently, Tesla has obviously been on a very parabolic rally. And you might actually start to see a bit of a short squeeze, as we've talked about before. But you're also getting a lot of bullish option activity as well. A bit of a gamma squeeze. If we take a look at the option activity here today, you have seen 481 orders from institutional investors, totaling $384.13 million with a positive order value of 83%. It looks like this rally has legs to continue, although the stock has been up 13 days in a row. It's been in the green. Short sellers are down over $10 billion in their short positions. The dollar amount currently sold short is $22.63 billion. And from my perspective here, it is all but certain Tesla stock is going to rally and break over 300 and pretty shortly be in the $1 trillion club again. And I think it's rightfully so. I don't think Tesla's valuation starts to get stretched at all. Obviously, it depends on your kind of time horizon. If you're looking at the next 10 years, then you should buy every share of Tesla you can. But if you're looking over the next three-ish years, all-time highs is where you start to say, like, hey, is this fundamentally justifiable for Tesla? As I am currently saying for an Apple, Microsoft, or NVIDIA that's currently at all-time highs. Is that justifiable? Well, you're far off of that. And I think from now until really the next big catalyst for Tesla, which will be around July 2nd when we get those Q2 delivery numbers, which are going to absolutely blow away analyst expectations, the stock's going to rally from now until then. The stock probably rallies bigger after July 2nd. So it could be a very happy 4th of July for a lot of Tesla investors, guys. So that is going to do it here in this video. I do want to say before we get off the air here, Tesla's RSI is massively overbought. Expect some sideways trading or some downwards trading to be in this range in between really 230 and 260 for a couple of days at some point down the line. Maybe Tesla goes straight to 300 and then trades in between 280 and 300. That's also a possibility. At some point, though, the rally will slow down. And that's actually what you want to see to continue to make our way higher, to break that 330 level, to get back into the $1 trillion club, ultimately breaking 350, my opinion, around July 2nd. Could be wrong. I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions. I'm just a guy that likes to try to see things for the way that they are and to really put things into logical context. So that is it for this video. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you have not done so already. Thank you for watching, and I will see you in the next one.